What is going on, everybody? We're back again with another video, and in today's video it is going to be kind of a piggyback off of our previous one on how to find high probability trade setups. This is going to be an in-depth walkthrough of how to simplify your trading, and I'm going to be using AUD-CAD and NZD-CAD for a weekly prep and walkthrough of internal and external range liquidity. So like always, what I do here is I start off with the naked charts. I want you guys to analyze this area of price, and I want you to make your annotations before I show mine. And what we're doing here is we're looking at our monthly chart. And this is going to tie into how to go top down in regards to weekly preparation to look for setups. So we're going to be looking at our monthly chart, then our weekly, and then our daily. So to start off, for the beginning on our monthly chart, I hope that your annotations came close to matching what I had. As you can see, our correlated assets, we have a lower low set on the monthly for AUD-CAD, and we have a higher low set on NZD-CAD. And I have a dealing range marked off from this low to this high, and a lot of people are asking me about why I'm marking off certain ranges. I'm marking off this range because it is the most immediate directional swing before a retracement. And likewise here with NZD-CAD, we have SMT at the lows, creating a higher low here. Price has a low and a high. This is our dealing range, the most energetic swing before price starts retracing. And as you can see, we're retracing into discount of the range. And price is retracing into this monthly bullish order block, and this is a high probability bullish order block because it takes out the liquidity resting here and then breaks structure, closing above this high. And you can see that price on top of this order block, we're accumulating longs inside of discount of the monthly dealing range. And a rule of thumb here is that within the first 10 seconds of looking at a chart, I should be able to label and identify a clear draw on liquidity. And the clear draw on liquidity that I was able to identify was on NZD-CAD, because you could see that the reaction off of that monthly bullish order block, we created an imbalance with a failure swing as well here at these highs. So that internal range liquidity that was made here, price traded back into it, and we respected it from both January's month and now going into February, taking out January's low, leaving us for a potential expansion to the external range high from December. So this is just a simple price moving from internal to external range liquidity, and as well as this, we're trading and retracing into internal range discount and the order block to potentially make its way up to these relative equal highs, which is the external monthly dealing range. Now moving forward, we're going to be looking at our weekly chart, and I want you to do the same thing on the weekly that we did on the monthly, but I want you to annotate this area of price. This is what we're going to be focusing on here and here for NZD-CAD. So take your time, annotate the charts before I show mine now. All right, now a quick pause before going and continuing the video. I wanted to tell you guys about the promotion that Day Funded is actually running currently right now that I just hopped onto. They're currently running a promotion where you buy one challenge, you get one free plus 50% off. So let's say you wanted to buy a 200K evaluation account. That would typically be $900, but this 50% off coupon is charging you $450, and you're getting two accounts. Two 100Ks would run you about $235. Two 50Ks would run you $165. Two 25s, $115. Two 10Ks are $65, and two 5Ks are only $30. Check out their Discord for full-time customer support and their Twitter. You can see their proof of payouts. Definitely recommend hopping on this promotion. I'll have the link in the description below. Capitalize on this opportunity, get funded, get a payout, and best of luck to you if you do it. Okay, and again, I hope that your annotations matched what I had placed here. And this was a very simple and straightforward move here. The things that we look for when price reaches these external or internal range liquidity pools, we always look for these SMT divergences. So I'm looking at, and I have been looking at for quite some time, is SMT on the low run and the internal range liquidity pool tag on Australian dollar, Canadian dollar on our weekly chart. Price has a dealing range from this low to this high. We retrace into the discounted internal range, but also taking out external range lows. So we have a two-sided bias here with two different targets. Once price reaches the daily or the weekly internal and external range, we have a premium internal range draw and then the weekly dealing range external high. That's another draw on liquidity. And we're looking at NZD-CAD. We have price being supported by the weekly bullish order block, creating SMT here, showing that it is stronger compared to AUD-CAD. And we also reached discount of that weekly range. Another thing to keep in mind and to factor in, we formed a swing low inside of a higher time frame key level. So we have the 3 candle formation here, and we have a 3 candle formation here off of the order block. So again, it's a very simplistic view that we're looking at right now. We're just looking at price retracing into a discount of a range for SMT divergence inside of that higher time frame key level, and then we're going to be dropping to our properly aligned time frame to look to see if we can frame a trade off of that higher time frame key level. So we went over the monthly and the weekly chart, and we saw that both charts gave a clear bias for a bullish draw on liquidity. Now we're going to just look at the daily chart just to see if we could frame anything else to give us more conviction and just more confidence in our long position. So I marked off on our daily the market structure shift off of our higher time frame key level for both, which is the closure above this high here, and it's the closure above this high here. And I wanted to also mark off the SMT divergences that I noticed inside of our higher time frame key levels on our daily chart. We had price make a higher low here on AUD-CAD and price make a lower low here on NZD-CAD. But I also wanted to mark off, just to get a closer look, the advanced market structure that I saw on NZD-CAD for just more confidence in understanding that market structure was aligning itself with the draw on liquidity. Because when price is moving towards an original consolidation high, you want to see price run buy stops in the direction of the draw. And as you can see, price created a long-term low here. This is our smart money reversal after we ran this external range liquidity pool and created SMT with AUD-CAD. After we had that, price pushes up, closing above that body high and creating a change in state of delivery, continuing higher, creating a short-term low here. After price created that short-term low, we had a retracement down, creating an intermediate term low running this short-term low that created the SMT divergence. So I know that this run on stops was just manipulation to engineer more liquidity for price to then have speed to push higher. And then an intermediate term low is not confirmed unless there's a short-term low to the right of it. And look, what do we have to the right is a short-term low. After we created that short-term low, this is Monday's price action, we had speed higher. And then this was Tuesday's price action today. So when price does these things and we run buy stops, especially on a daily chart, we are going to understand that there's not going to be any more need for the retracement, because what we're looking at here is the smart money reversal. The intermediate term low is labeled as the lowest buy. The short term low to the right of the intermediate term low is the accumulation phase. And now what we're paying attention to is any reaccumulation on the daily chart for us to deliver to the relative equal highs external range draw. And a quick add-on here, this is price moving from a monthly key level to a daily chart, framing a daily market maker buy model. So that is our time frame alignment on NZD-CAD. Monthly key level to a daily market maker model, which is what we're anticipating here to draw to these triple top highs. But now moving a little forward, I want to show you guys Australian dollar, Canadian dollar, and New Zealand dollar, Canadian dollar on our 4-hour chart. And this vertical line here is the separation from previous week to our week now. And this is Monday to Tuesday's price action, Monday to Tuesday's price action here. And as you can see, the open of the week was what gave us an entry for a long position to our buy side liquidity pool, draw the internal, or at least in the direction to our internal range liquidity pool on our weekly time frame. I have the stop hunt set here on NZD CAD, but the delivery was much more clean on AUD CAD to our buy side liquidity pool draw, because we created the stronger higher low here compared to NZD CAD making the lower low. So I did focus on AUD CAD for the long position to take to that high once we got to the new week open. So here was my annotations for Australian dollar, Canadian dollar on our 4-hour chart, because my time frames that I aligned was the weekly external and internal range tag to a 4-hour market maker bond model. And you could see that market structure was aligning itself with the draw and liquidity. And we actually had at 8:30 today was CPI data released for Canadian dollar, and it was bearish. So that would mean that any XXX CAD cross, if CAD futures are bearish, then they would be bullish. You could see that we had a clean and smooth delivery to that high draw. But we made SMT divergence inside of the weekly key level. Price broke structure, clearing and closing above this resting high. And after we did that, this up close candle resting here was our breaker block, because we ran these lows here. Price dropped, pushed up, closed above. So this was a potential entry if you executed in the previous week, but I did not. And then price came down. The wicks were just doing the damage. The bodies were staying inside of the breaker, just running more buy stops, creating an intermediate term low here. And after we created that intermediate term low, we push up aggressively. Here is our weekly open on Sunday. And then going into Asia session is when I actually executed the long position during past 8 p.m. Eastern Standard Time off of this down close candle order block. And you may ask yourself, like, why did I enter right at the new week open? I entered right at the new week open was because structure already showed me that we didn't need to run or retrace at any more time. Very quickly, if I go back and I look at our correlated asset, what is going on here? Previous week, we ran buy stops 2 separate times, creating our intermediate term low and our short term low. Our only other means of expansion strictly was pushing towards our buy side liquidity pool draw. If the daily has already framed a clear structure towards our anticipated draw and our correlated asset is stronger compared to the one that actually ran the buy stops, there is no need for me to even wait for a potential retracement. And even on the 4-hour chart here, we accumulated buy stops when we traded into that 4-hour bullish breaker block. And if price traded down lower even more, I would assume that we would be taking out these lows here. So market structure was already aligned with the draw and liquidity. So in my eyes, in my interpretation, I was expecting all bullish PD arrays to be respected. To top it off as well, we had an up close candle resting here. This was our mitigation block, because up close candles on the sell side of the curve are used to watch to see if PD arrays form inside of there. And we had a 4-hour bullish fair value gap that was perfectly used as an entry with order blocks that supported price to push higher. Now, this was my complete and utter simple approach for a weekly prep. And you can see on my previous video of what I did with USD CHF, I did the exact same thing for AUD CAD and NZD CAD, and I have been looking at them and monitoring them for weeks now. When price reaches a higher time frame key level, all you need to do is just watch for structure to properly align itself to your anticipated draw and liquidity. You wait for the SMT divergence, and then after you get the SMT divergence in the higher time frame key level, you wait for the change in state of delivery or the market structure shift, and you execute on the proper retracement. All of my trades look exactly the same. I do the same thing every single time, and if you go through all of my trade breakdowns, it's literally just external and internal range liquidity and then market maker models with premium and discount. These videos will keep coming, and I'm hoping that just the more you watch them, the more you see my process, the more you'll understand how easy this could actually be. Now, I'm definitely going to try and bump up uploads to 2 times a week and bump up streams to 3 times a week, because I just want to provide as much value as I can for you guys. But anyways, I hope you enjoyed the video. Have a good rest of your week. Good luck, good trading, and I'll catch you guys in the next upload.